Thank you, Mr. Chairman. So, Chairman Clayton, on January 26, Bloomberg published an article entitled SEC Weighs a Big Gift to Companies, Blocking Investor Lawsuits. Now, as you know, class action lawsuits are how investors can hold companies accountable when they defraud people. And the article says the SEC is thinking about letting companies sell shares in initial public offerings while at the same time allowing those companies to prohibit investors from bringing class action lawsuits against them. Wow. I mean, forcing investors to give up class actions when they've been defrauded. The SEC has never allowed corporations to bar investors who get cheated from bringing class action lawsuits. So I just want to get a straight yes or no answer from you on this. Do you support this enormous change in SEC policy?
So I think you know that I can't prejudge an issue that may come before the SEC, but I'd be happy to talk to you about this. And let me get to the bottom line. I can't dictate whether this issue comes before us or not because of the way it has come before the SEC in the past. But I'm not anxious to see a change in this area.
Okay, so I'm reading tea leaves here.
No, you are reading tea leaves. I'm not. I
mean, you run this agency. The change can't happen without your approval. I think it's fair for the.
That's actually not right. If it came up before the agency, I'm only one of 5 votes.
I'm going to guess there are going to be at least 2 votes against that, and that you, at best, will be the deciding vote.
Senator, I don't want to prejudge the issue. If this issue, I want to be practical. If this issue were to come up before the agency, it would take a long time for it to be decided because it would be the subject of a great deal of debate. And like I said, in terms of where we can do better, this is not an area that is on my list for where we can do better.
Okay, so I tell you what, Chairman Clayton, I'm going to let you get away with that because what I'm reading is real skepticism about a rule like this. You know, the SEC's mission is to protect investors, not throw them under the bus. Mm-hmm. And I can't think of anything that would do more harm to investors than saying they have to pre-waive their rights to sue a company in a class action when that company cheats them. So,
like I said, it's not a change that's on.
I hear you. So let me ask you about something else, and that's the fiduciary rule. Mm-hmm. Financial advisors who put the high fees, the commissions, the kickbacks, the prizes they can get for recommending a specific product ahead of the interests of their clients cost hardworking Americans trying to save for their retirements about $17 billion every year. And that's why President Obama and the Department of Labor put the fiduciary rule in place to eliminate these conflicts of interest in retirement accounts like 401ks and IRAs. Now, less than a month after you were sworn in as chairman of the SEC, you issued a request for information asking for public comment on rulemaking related to the standards of conduct for investment advisors and broker-dealers. Mm-hmm. Can you state to this committee that any rulemaking you do on this topic will not weaken the existing protections for retirement savers?
I'm making an absolute statement like that?
Yeah, an absolute statement that you are not going to weaken rules for people who are trying to save for their retirement.
From what baseline?
Well, we have a rule from the Department of Labor. Now, you could strengthen the rule, you could pass the same rule, or you could weaken the rule. I want to know that you're not going to weaken the rule. That's all I'm asking you.
Here's what I'm trying to do. Let me tell you what I'm trying to do. The relationship between an investment advisor, broker, dealer, and their client in a very simple area, they have a 401k, they have an annuity, and they have a few stocks, is regulated, throw out the banking regulators, it's regulated by no less than 5 people. And they all have different standards. My main objective is to bring clarity to that without jeopardizing investor protection.
Well,
that's how I'm.
But that's the question I'm asking about it, about whether or not you're jeopardizing the protection that people are trying to save for their retirement get. I get that you could bring clarity. Clarity could be do whatever you want. Clarity is what is right now has cost American investors saving for their retirement $17 billion a year.
I think it's a combination of an insufficient standard in some places, which we are looking to increase.
I'm glad to hear that.
A lack of clarity, and also the standard is only as good as the remedy available. And one of the things that I'm also looking at, believe me, spent a lot of time in this space trying to get it right. One of the things we're looking at is what dollars do you actually collect when somebody has done you harm? Because you can have a really strong standard, but if there are no dollars there, that's a problem.
So I agree with you, Mr. Chairman. If you want to strengthen enforcement of this rule or strengthen the rule itself, count me in. But that's what the American people look to the SEC for. Thank you.